Hello everybody. So I will be covering a lot of different stocks in this video. These are the rebound ready stocks. These are stocks that I think could be ready for a bounce at least within the end of the year, right? Within the next 10 weeks. So of course I talk a lot about strategy on the channel. I don't have much to add right now except that the valley of despair on strategy continues. The mNAV continues to compress at a slow pace. I would argue it's not dropping catastrophically like any of the other Bitcoin treasury companies, but we are still seeing a compression. That being said, stocks can't go down forever. At some point there will be a bottom, and to me we are closer to the bottom than not. Actually, as of this morning, the daily trading volume of strategy was more than Microsoft, and so this may be a sign of new traders taking in positions with strategy, and we have a lot of catalysts coming for Bitcoin and strategy, and those two are correlated. Of course, shutdown ending soon, hopefully the rate cuts at the end of this month, the meeting between Xi and Trump 2 days before the tariff deadline, so that could be there could be some very positive headlines that would make Bitcoin go up if they were to come to an agreement and were to close this hiatus of a new trade war. That'd be really bullish. We have Stretch. Remember, Stretch will be forced to cross 100 with time. If you give it another month and Stretch is not up after a rate cut, he will just increase the dividend of Stretch again, and when he does that, he can force the stock to get to 100, and that's when he will issue the ATM hard on Stretch, and then we have a lot of liquidity potentially coming back in the market, as a lot of money is in money market funds, money market accounts, and as the rates drop, this money will be looking for a yield, will be looking for risk-on type assets. The money sitting in money market accounts, trillions, will be looking for more profitable assets, more growthy assets, and I think a lot of that money is going to flow into Bitcoin. So that's enough for strategy. I want to talk about Solana treasury companies. Of course, Solana is not Bitcoin. A bet on a smart contracts blockchain is different from a bet on a new monetary standard, but nonetheless, these blockchains, they will replace Web3 apps, right? You will have blockchains like that who will replace YouTube, will replace, music, AI, video games, you name it. Of course, banks, insurance, but it's a much bigger story than that. The world is moving from companies to blockchain, and a lot of the Web 2 companies will be replaced by blockchain. At least that's the vision of crypto, and that's kind of my vision as well. And we're going to see these applications, and if these applications are built on Solana, I mean, they will likely build on multiple solutions, but I believe the fastest and the cheapest blockchain right now is Solana, and so Upexi is a bet on Solana, and it's a way to access very inexpensive Solana. So in fact, they claim to have a fully loaded mNAV of 1.3, but when you calculate the basic mNAV yourself, I calculated for Upexi, it's 0.72, which is literally unheard of. You have a third discount, like you have a 30% discount on the mNAV. And the reason why I love basic mNAV and I don't really like fully loaded mNAV is because we know that this will equitize, right? A lot of the debt that is borrowed, and that's how you get to fully loaded mNAV, because you count it as debt, in the end of the day, is just going to be future dilution, because that debt is likely going to convert to equity. So I would just rather use the market cap and the basic mNAV rather than using debt that will convert to equity at a very accretive level, presumably in a few years when those debt convert, because it will convert at a higher rate than it is today, but it will convert presumably at a much lower rate compared to the price of Solana years down the road. That's why I don't think fully loaded mNAV is the right way to look at it. I think the simple, stupid way to look at mNAV is the best way, and that's basic mNAV, and that would be simply dividing the market cap by the net asset value, and that's where you get a 0.72. So Solana is at an enormous discount if you buy it in the Upexi wrapper. And here's another way to think about it. So we know from DFDV, and we know roughly that these active managers of staking pools on Upexi, and throw in a little DeFi, throw in a few partnerships, we know they roughly earn 10% staking rewards, which is much higher than what you can expect from the Solana ETF. So assuming they earn 10% staking reward on these 386, that would be $38 million each year. Let's calculate a PE on that. The stock is trading at $280 million divided by 38. That's a 7.2 0.2 price to earnings or price to staking rewards ratio. So that alone is super cheap. It's trading like an auto company that's going out of business, except it's owning one of the assets of the future, in my view, one of the leading assets in the future, in my view. And this doesn't include, of course, any upside potentially related to Solana. And of course, Bitcoin is my first love in crypto, and I will always be faithful to Bitcoin. But whether you look at Solana or Ethereum, we have to realize that they move hand in hand. There's a correlation. And so if Bitcoin goes to 250, Solana will go to 500 or something, right? And so that's kind of the side bet. I love it very much. Upexi has dropped, by the way. Upexi has dropped much more than Solana. Solana is only down like 12-13% from October 6th to today. Upexi is down from October 6th to today 38%. So Upexi has dropped 3 times more than Solana. And I mean, we've now reached a ridiculous mNAV of 0.72. So I don't understand. I think it's heavily undervalued, and I think it's due for a rebound. Moving on to another stock. Of course, I don't cover Tesla much on the channel. Every other channel covers Tesla. But you bet I was listening to the call yesterday, and Tesla is my biggest position now. With strategy not performing too well, Tesla kind of went back up as number one. So it's their biggest quarter ever. Revenue growth was stunning, reported to the upside. Highest quarter ever with revenue growth. Of course, the media, they pick whatever's negative and they report on that. So the media reported on the negative EPS compared to analyst consensus. But when you look at the EPS, it's actually the highest cash flow ever. The EPS was down because of an accounting, a discretionary accrual. Well, I guess they decided to recognize a loss on Dojo. And that's an accounting matter. It's not really a cash flow matter. And of course, we get into the shenanigans of EPS, and people kind of they can massage that number. And of course, commentators are like, oh, the EPS is bad. Well, I don't look at EPS. I look at cash flow. I look at cash and balance sheet. They had the highest cash flow, the highest revenue, and they have the most cash on the balance sheet that they've ever had. We had also a lot of qualitative information, like Robotaxi will roll out to likely 10 cities by year end. And so you could cover a whole bunch of the United States if you go to the major cities. Cybercab in Q2, that's actually Q2. I mean, you likely we'll see it in H2, but Cybercab, likely in the later half of 2026, you will have a production begin. And of course, Optimus version 3 should be, I mean, based on all of the analysis that you read, it should be one of the biggest products out there, like kind of an iPhone moment for Tesla. And the version 3 will be the version that could be manufactured at scale. And Elon in the call was talking that their vision for the long term is to manufacture millions of these. And of course, he talked about FSD. We know a bunch, if not most, of the value of Tesla has to do with FSD. They're working on hardware 5. Elon works a lot on hardware 5 right now, and it will be 40 times better than hardware 4. Too intelligent to just do self-driving, and so he's talking about distributed computing. It will be interesting to see how distributed computing in cars plays with, I don't know, a nation's strategic advantage, a nation's laboratories, Could Elon create an AWS that's only cloud-based? There's so many amazing stories from that. So to me, it's extremely impressive. The quarter was extremely impressive. Elon is a visionary. He only talks about the super long term, which means that the analysts didn't like it. The analysts didn't get it. Plus, let's note, the competition is struggling. I was looking at Ford. Ford is up 5%. A few days ago, GM reported they were up 10%. The market only cares about the short term. The competition is struggling, but the market is happy because they're not doing much in EV anymore. So they're making money again. So competition is struggling over long term. That's a big plus for Tesla. Interest rates are dropping. And of course, people buy a car payment. So not only did Tesla drop the prices quite a bit, especially on the new Model Y standard, the lease prices are very low, but the interest rates are dropping, which means that these lease prices will be able to drop. People who want to own the car will be able to buy it with a lower interest rate. So lots of positivity, lots of good stuff going on with Tesla. And the stock ended up on the day, which was absolutely amazing because yesterday was pretty much usual for Tesla, which is you had a big move to the downside in the stock price. And of course, the market came back to its senses today. Let's talk about OSCR really briefly. So, trending across the country, across the internet, people are going on Marketplace and they're looking at the new rates that are advertised by OSCR and others. And you have people who get on TikTok who are very upset about the new rates. Well, I listened to the OSCR call and I can tell you why. It's because they had to pay up a little more this year than they should have. Had to do with regulation and all sorts of payout premiums and ratios and compensating over insurance companies. Anyways, they're making it up this year, and which is why you had a lot of increases in the teens in the terms of premium prices. And now you have people who are very upset about the premiums increasing, but the premiums are increasing to make up for the loss that these insurance companies made earlier this year. That's why the premium is increasing. And I think the revenue growth for OSCR will be large next year as a result of these premium increases. But especially, and this is a wild card, but especially people own OSCR because they kind of bet that the ACA subsidies will be expanded for people making less than the federal poverty line. If they get a subsidy, and that's where these plans get pretty attractive, they're thinking that the subsidy will be expanded because the voter base is also, it's also Trump's voter base. The voter base is on both sides. So they both have an incentive to expand the subsidies. And so the odds that will happen when the government shutdown ends. And when the government shutdown ends, a lot of people are saying, well, OSCR is going back to 30. So, to me, I don't care because I own OSCR because it's cheap. I'll be straightforward. That's the only reason why I own it is because it's cheap. It's 0.039. It's the second cheapest in my entire spreadsheet right now. It's cheaper than LifeMD, and I like a cheap stock. How much am I paying for that growth? Next to nothing. All right, look at that. Enterprise value to forward revenue is 0.14. Enterprise value to forward gross profit is 0.78. This stock is essentially trading for free compared to the revenue. I mean, it's just crazy cheap, and that's the only way I would be in an insurance stock. I don't like health insurance companies. I don't want to invest in them. I think it's a very tough business, highly regulated business, very tough to make money in my view. Lots of regulation, government intervention. But when it's so cheap, I make an exception. This one is dirt cheap, so I'm making an exception for the time being. If it ever were to not be cheap, if it were trading at a 0.2, let's say the stock rallies, I would be out of this stock. This is a medium to short-term hold for me. Moving on to another stock which is back up. I mean, yesterday was a buying opportunity. I had mentioned it on the Patreon too because I added to this stock. So anyways, Nebius, I'm not going to do a rehash of a video I did yesterday, but yesterday looked really like a pretty darn good deal. Yesterday it was at 96. Well, we opened up and we traded even more up. So up nearly 8% if you had after hours, 8% on the day. This stock is still dirt cheap, trading at 0.12. Of course, people are realizing, we saw, for example, the Anthropic deal with Google today with the Google chips and the Google GCP platform, $1 billion deal for Google. So, of course, slightly different business, but the point is AI is not hype. AI is real, and there is a very high need for these GPU cloud data center, of which Nebius is likely the best out there because they are a former big tech firm in Russia called Yandex who spun off, and the management team and the engineers are all big tech grade, and they have relationships, and they're able to get those contracts more easily than, say, an Iron or CoreWeave, or at least that is the theory, and they have a full software stack. A lot of the Bitcoin miners who are trying to get into the business of GPUs, even though it is working clearly, they are renting bare metal versus Nebius actually renting the software, using the relationships to seamlessly integrate their offering with companies like Microsoft. And the fact that they got Microsoft to do a deal with them was a game changer for this stock. I mean, because of a Microsoft revenue deal, because of the contract with Microsoft, they should see, and That's the way I see it. They should see next 12 months 69% revenue growth. That's the way I calculate it, and that's why I find it so cheap right now. Of course, maybe it takes longer to ramp out that contract, maybe, but the stock is cheap, and I like it. I liked it better under 100. Now it's bouncing back. That's too bad, but I still think it has a nice room to rally. Moving on to another stock, of course, HIMS. HIMS got a breather today. HIMS breathed a little bit today. Of course, I'm not going to do a rehash of the video of yesterday, but you know, some people take HIMS too seriously, and I saw an X like some days, so someone was like, okay, I love HIMS, but I can't take the 30% drawdown. We're up 30% like 5 days ago, and now we're back down. You know, I've owned this stock since $5, right? Since the first time I covered this stock, it was around $5. So for me, it's just funny at this point, because the stock moves to like 63 and then it moves back down, and then people try to chart it and they say there's a resistance in the mid $60. Clearly, people should be long-term investors. In my view, this is a long-term hold. This story is much bigger than people think. This story is about the disruption of healthcare, the disruption of insurance, the disruption of doctor. It's a doctor platform. It's AI-powered. You know, if one day AIs are going to do prescriptions, HIMS will be first in line to be able to implement these AIs. Right now, they use a network of doctors, network NPs, doctors who are all connected and connect patients to doctors, all telehealth. I mean, this company has so much going for it. In my view, the market is underestimating it again. Testosterone should be huge because there's a lot of cross-selling opportunities with a lot of their ED customers. Menopause should be what HIMS needs to take the HERS platform to past $1 billion revenue run rate. Yep, this stock is a winner in my view. It's a long-term hold. I'll keep holding it, and it is cheaper than it was a few days ago, right? 0.15. We are rebounding, so we are rejoicing, pretty happy about that. And the last stock, which kept dropping today, and I'm only talking about REAX again because of this headline, which is, of course, we had the 10-year. The 10-year yesterday hit a 52-week low. What headline do we have today? The U.S. mortgage rate hit 6.19%, the lowest in over a year. Lowest mortgage rates, average mortgage rates, the lowest average mortgage rates in over a year. You see the 10-year and the mortgage rates are very, very, very closely linked. As this drops, these mortgage rates drop. And so we need to monitor and see how much more that's going to drop. That's likely going to drop more with the interest rate cut. And of course, the market trades on whatever, and you have REAX who's trading at 387. So dropping. This stock is dirt cheap, 0.10. It doesn't have the meme stock or the hype factor of an Open Door has, and that's personally my bet on real estate picking back up. That's kind of a macro bet for me, and this stock has been gaining agents. They've been growing revenue very, very fast in a tough environment. I cannot imagine how well they would do in an environment where, say, mortgage rates fall back below 5%, which is what I think we're going to see sometime in 2026. So I'm bullish on this one too. I think this one could rally, if not into the year end, into the next buying season, the spring of 2026. I think we could see this one rally with a few good quarters. So anyways, this was not investment advice. This is not financial advice, only entertainment on this channel. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.